Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Equitable Holdings proxy statement, which sounds like a boring document about voting, but trust me, it has juicy details about executive pay and some interesting shareholder battles brewing. Think of it as corporate Game of Thrones, but with spreadsheets. First things first, let's clarify some jargon. When the report says Equitable Holdings, we, us, or our, it means Equitable Holdings Inc. and all its smaller companies, unless it's specifically talking about just Equitable Holdings Inc. alone. Also, AB means Alliance Bernstein, where Equitable Holdings holds about a 62% economic interest. Alright, so what's on the agenda for the big shareholder meeting? There are several important proposals up for a vote, including electing 10 directors, approving the company's accounting firm, and a non-binding vote on executive pay. But here's where it gets interesting. There's also a proposal to amend the company's rules so that shareholders can call a special meeting if they own a certain amount of stock, and a separate shareholder proposal trying to lower that ownership threshold. It's a classic power struggle between management and investors. Let's talk numbers. In 2024, Equitable Holdings had a pretty good year. Cash flow hit $1.5 billion and their non-GAAP operating earnings, which is a special way they calculate profit, reached $2 billion, up 19% from the previous year. They also gave back $1.3 billion to shareholders. The company also had a lot of net inflows, which is like a bucket filling with water faster than it empties. Now, let's peek at the people in charge, the board of directors. The average age of our incumbent directors is approximately 66 years. There are 10 directors in total, including Joan Lamb-Tennant, the independent chair, and Mark Pearson, the president and CEO. We have some changes, as in January 2025. Douglas Dackell joined the board, bringing in over 30 years of relevant experience. The company seems to take board refreshment seriously. They seek to balance refreshment with the need to retain directors who have significant insight. There are a few policies in place to ensure that the board continues to align with EQH strategy, the competitive landscape, the composition of the management team, and the external environment. Diversity is another key factor. The board believes a diverse board is better able to oversee our management and strategy, and that positions the company to deliver long-term value for our stockholders. Overall, 50% of our current directors are diverse. Now for the part everyone loves to hate or secretly admire: executive compensation. The main goal of Equitable's compensation program is to attract, keep, and motivate top executives. The overall program design has limited changes for the 20,000 team and Fortune as a measure to performance shares under our long-term incentive compensation program. Check this out. A substantial majority of an executive's compensation is tied to the company's performance. The participants in the EQH compensation program continue to align with our pay for performance culture in 2024. Total direct compensation consisted of a mix of fixed base salary and variable annual cash incentive and equity-based awards components. Switching gears, let's look at the fees paid to PricewaterhouseCoopers, the company's independent auditor. In 2024, they paid PwC $24.7 million, down from $36.6 million and $26.6 million in 2023. Audit fees made up the bulk of that at $18.7 million, and 2023 audit fees made up the bulk of that at $18.7 million. TAID AOC 2040 benefit plan audits and tax fees for tax compliance and advice. One key item to watch is Proposal 6. This proposal asks shareholders to approve changes to the certificate of incorporation to limit the liability of certain officers but not directors. It does not protect against acting in bad faith, illegal activity, or breach of duty. Proposal 7 asks shareholders to vote to amend our current certificate of incorporation and bylaws to provide our stockholders owning 15% or more of our common stock the right to require the company to call a special meeting, subject to certain procedures and limitations. This will be reviewed as a result of the stockholder proposal coming up next. This is where the drama really begins. A shareholder, John Chevedden, wants to give shareholders owning just 10% of the company the power to call a special meeting. The board is against this, recommending that shareholders vote against this proposal, and instead they are recommending implementing a 15% threshold. They think a lower percentage could lead to too many costly and disruptive meetings, driven by short-term interests. Equitable Holdings is committed to reviewing its compensation program each year to ensure that it reflects stockholder feedback and continues to comport with strong governance principles, incentivizes excellent performance, and aligns executives' financial interests with those of our stockholders. The company doesn't reprice underwater stock options without stockholder approval, allow executives and directors to hedge or pledge company securities, or provide excise tax gross-ups upon change in control. In 2024, the Compensation and Talent Committee granted equity-based awards to the EQH program participants under the Equitable Holdings Inc. 2019 Omnibus Incentive Plan. As in prior years, 2024 annual equity grants consisted of time-based restricted stock units, AYSUs, 40/20s, and in 10 portions to 60 east. However, for 2024 performance share grants, we added a second performance metric, non-GAAP EPS, with a 30% metric weighting and reduced the relative TSR metric weighting to 13 begonia at AAF for 2024. Performance share grants. We added a second performance metric, non-GAAP EPS, with a 30% metric weighting and reduced the relative TSR metric weighting to 30% from 60% in 2023. For 2024, Mr. Pearson had 11,600,000 for an equity target, Mr. Raju had 2,000 and Mr. 50,000, and Mr. Lane had 2,700,000. These were determined based on performance and market conditions. If any of the EQH program participant experienced a termination or change of control, the table here lays out what they would get. For example, the compensation to people like Mr. Pearson would be in the tens of millions of dollars. Of course, this depends on the outcome of the vote in Proposal 6. Based on the review and discussions described in this Audit Committee report, the Audit Committee recommended to the Board that the audited financial statements for fiscal year 2024 be included in our annual report on Form 10-K for the year ended December 31, 2024 for filing with the SEC. Let's not forget about environmental, social, and governance factors. The Equitable Holdings Board oversees ESG strategy and has ESG information aligned with the Sustainability Accounting Standards Board, Standards and Task Force on Climate-Related Financial Disclosures recommendations. The company is committed to growing investments in renewable energy and other community investments. The board oversees management of significant risks facing the company with an independent board chair and finance and risk committee to support oversight. Finally, looking at the CEO pay ratio information. In 2024, the compensation of Mr. Pearson was approximately 140 times the median pay of all employee times the median pay of all employees. His total compensation was $1,760. So what does this all mean? Well, Equitable Holdings seems to be navigating a complex landscape, balancing growth with shareholder demands and keeping a close eye on risk. The biggest question mark is the battle over the special meeting threshold. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more deep dives into the corporate world.